Good day, everyone. Welcome back to another weekly outlook. Um, and today, we're talking about the potential setup for the Euro USD. Um, now I've been looking at this. I've been in a position for Euro USD now for a few weeks now, and I'm gonna always break it back down when we come and we take a look and see what's going on. So let's get right to it. So, quick recap: the weekly time frame. Let me hide some of these things so it doesn't get confusing for you guys. Like I said, I'm gonna say again. This right here was the 2025 high. This is the highest point it went in 2025, Monday, the 15th of September, 2025. This week right here is a liquidity sweep of the 2025 high. We then waited, and then Q1 basically just set it up for, you know, the next half of the year, and it broke structure on a weekly basis. As you can see here, we broke and closed below uh, this low here. So this is a change of character. You have this low being broken and closed, and this low that has been broken and closed. So now we have a change of character, or break and close of the structure. Then we wanted to trade, looking for sells in premium pricing. So we had to wait for the market to, well, you still caught some moves going upwards up into this premium area. I was looking at this weekly fair value gap here, and also this gap within this weekly fair value gap as well. It's more like a suspension block if you really think about it. But yeah, not gonna dive into all of that. So we retrace, we're up in premium pricing. I have some positions in already from the highs. Um, and now what we want to see today, or whatever, because you know we don't want to get trapped, uh and then we don't want to just say, oh well, the market's ready to move down off of the or off of impulses. So what are we gonna do today? So okay, here we come to the daily chart. I'm gonna i'm gonna put some of this flavor on the chart for you guys. So I have an alert set down here, right where it says weekly, for when price actually gets down here. We have FOMC today, so I just want to see how price reacts off of that. Now, the A plus setup that I was telling you guys about, um, all, all the for the past few weeks, this is it. Okay, if it sets up, I'm gonna show you guys right now. So I have a little indicator here, right down here, and basically I look I I scour trading view for this indicator. I just go and I want to see the comparison between the two GBPUSD and EURUSD because they are closely correlated pairs. So what does that mean? If if this high right here, right? Look at this high. If GBP USD was to go up, it and take out this high, Euro USD should have done the same thing. If Euro USD came here and didn't take out that high, then then GBP USD should do the same thing. However, this is a crack in the correlation because what it shows me right now is that GBP went above the high in its chart. GBP went above this high. Euro USD failed to make a high above that high, and so now we have this crack and correlation or SMT divergence. The way this setup, the way this setup works, like you can't be fooled because you can have SMT divergence any and literally everywhere if you really got this tool on. But what I'm gonna show you is what I don't see other smart money concept traders getting. I only look for SMT divergence within higher time frame fair value gaps. So what does that mean? If I'm on a weekly chart, right? Um, I'm going down to the daily time frame to see if I get an SMT divergence. What is gonna make this a valid sell is if price were to come down, break and close below this low right here. That's why I have my alert set down here. I need to see a break and close below this low, and I need to see it leave a fair value gap intact. Um, and afterwards, it should align with my um SMA, my 14 SMA for that sell. If it happens today, then it happens today. But I'm expecting a setup to happen this week. Now, if we don't get that today, if we just roll on up here, um, and say that get up into this range, then you gotta understand this other thing. GBP USD is still in close proximity to its high up here. So if GBP USD takes its high, which is up here, right? You just gotta go look at GU and you'll see it. If GBP takes out that high and Euro USD fails to take out this high up here and then rolls back down, this would now be the new SMT divergence. This is invalid until a break and close below a strong break and close below the structure point right here. So we're just waiting to see if we get some level of rollover today, and yeah, I'll be, I guess, trading live after that. I'll come on YouTube live and enter my positions or maybe just put in a limit order. Um, because now the target, this is my actual entry up here, like I told you guys. So 1 to 7 risk to reward. I'm targeting really, and we get down here, we could take out some profits, right? But I'm really targeting this 6 month fair value gap to then see if we could get a change of structure, a break of structure, some character shift to set us up into, sorry, my bad, the yearly fair value gap, which is right up in here. This deep red shaded line. Okay, cool. So the SMT divergence setup. If you are on, this is the rules for it. If you are on a daily chart, you can see an SMT divergence in a daily fair value gap. I'm looking for a sell SMT divergence because I am in a sell fair value gap. You get what I'm saying? So I'm looking for the SMT divergence in red. That's why I have everything labeled red and green. See, the green is for buy and the red is for sells. So here we are, the SMT divergence setup that I'm talking about. I want to see, you know, I want to see like I want to see this go down. You see what I'm saying? The green is literally for buys. The red is for sell. If you are on a 4 hour chart, now another thing, if you're on a daily chart, you can and you're in a daily fair value gap of interest, you can then look for SMT divergence on the 4 hour, the 3 hour, the 2 hour, and the 1 hour. Those are the criterias for being in an SMT divergence on a daily chart, in a daily fair value gap. The criteria for a weekly fair value gap is you look for SMT divergence to form on the daily or on the 4 hour, and that they're the only two time frames like you should be looking for SMT divergence setups on. If you are in a 4 hour fair value gap, a 3 hour, 1 hour, 2 hour, or 1 hour fair value gap, then you go down to the 45, 30, 15, 10, and 5 minute to look for SMT divergence. So when you're dealing with the hourly SMT divergence, I mean, when you're dealing with the hourly fair value gaps, you go down to the minutes time frame to look for the SMT divergence to form. If it happened down sorry, it happened down here. If I go to a 4 hour chart, we do this for you guys right quick. So it's taking long to load. I guess I have slow internet. So we're on a 4 hour chart here. And down here, typically the setup would look something like, I guess something like this. But I can't see it. Hold on. Let me move this back. Because I want to show you guys a good example. So and I see here this was a daily fair value gap right here. We came up in it. You can start looking for SMT divergence. Here I looked like I had it on the 4 hour. And then I guess if I go to the 1 hour, it was much more clear. This is taking long to load again. So there we go. So yeah, we had that SMT divergence on the 4 hour. Here on the 1 hour, we broke structure uh, down here, and then we had this fair value gap. But this isn't one that I would be too strong on, honestly, because I want to see like my moving average. I would take a small position on this, but I want to see my moving average not be traded through and closed above. A great example is what I showed you guys in the last video. If I go to the back to the daily chart now, it looks it looks something like this. So what we don't want to do is, okay, we have an SMT divergence set up here, right? We're inside of a monthly fair value gap in here, and we have this SMT divergence. Why isn't this, okay, we came down this day, you know, why couldn't we sell? Because we didn't have a structural break downwards. We just went up and we tested the monthly fair value gap even more. If I wanted to see like this thing sell off from here, it would have had to broken this low, leave a fair value gap, then come up. And then it showed that it had an SMT divergence right here, but I'm still looking for my confirmation. This for me is my first sign of confirmation when it breaks this structure right here. This last down close candle, it breaks and closes right here, and then it left a little fair value gap. Oh, oh no, this would not be the first sign, my bad. Where we initially made the SMT divergence right here is when it tested the fair value gap. Now we want to see it break and close below this structure. See what I'm saying? It didn't make the SMT divergence until this candle. So now these other candles here have to close below this low, which you see here on the daily chart, and then trade up into this daily fair value gap that it made in alignment with the my 14 SMA, and it was topping it very perfectly. And then down into this, what you guys can see is a weekly fair value gap. And, I hold it a little longer too. So you could have taken out at the low, or you just could have waited for more volume to come in and just, it's sold off handsomely. And so, we have these a lot in the lower time frames, but you have to know what you're looking for. You have to know where you're at in the market. There are other times that this is used. This is a great example right here. This is right after the terrible month of August. August is not a good month for trading USD. I'm telling you guys. So we have this daily fair value gap that the August month was just bouncing. So, like I said, you may see the first SMT divergence, but if you don't have that break of structure, then it's not valid. Because here we have the SMT divergence within this candlestick. Now, what we will want to do is see this get broken, but it didn't. It came back down, and then it made another SMT divergence within the daily fair value gap. The candle wick has to be inside of the fair value gap, not outside, not on like inching on top. It has to be inside. And then after it made this, then it made that move and broke the structure up here, and then left the fair value gap in alignment with the 14 SMA. You could your stop loss below this low, and then I was targeting the first top of the monthly fair value gap right here, which was the 2025 high. And then, this was a 1 to 9.15 risk to reward. It's a great risk to reward. Everything you see, like when you get these on higher time frames, it's very high probable. Higher time frame, you could get them on, the 15 minutes is a sexy one to get it on. And also the 4 hour to me is more consistent with SMT divergence. What's going on with you now? Hold on. Cool. So yeah, that's what we have. You can't just take it off random spots like this and then expect it to work out. It's not in an area of interest. It's not in a fair value gap. See what I'm saying? So do your back testing, do some research. If you have any questions about it, feel free to ask me in the comments.